Share market is surprising us, but the figures of mutual funds industry are also fascinating. On one hand, people are continuously investing in mutual funds, and on the other hand, share markets are sliding downwards. Even though the financial markets were volatile in April, the Indian mutual fund industry had a good start to the new financial year. The overall mutual funds saw net inflows of 72,847 crore rupees during April. According to the data released by the Association of Mutual Funds in India (AMFI), the amount of money in mutual funds was at an all-time high. As of April 30, net assets under management (AUM) were 38.03 lakh crore rupees, which was a growth of 17% from the previous year. Equity mutual funds. On the other hand, there has been a fall in net inflow of equity mutual funds. The equities category got a net inflow of 15,890 crore rupees during the month, which has declined by 44% as compared to March's net inflow of 28,464 crore rupees. So why was there a fall in equity mutual funds? Now if mutual funds are performing good, then what's the issue in equity mutual funds? This indicates that investors are taking a cautious approach when it comes to investing in equity mutual funds. On the positive side, sectoral funds, large and mid-cap fund and flexi-cap fund witnessed a significant inflow of funds during April.
Further, the rising interest rates indicate that investors invest their money in debt mutual funds. On the positive side, sectoral funds, large and mid-cap fund and flexi-cap fund witnessed a significant inflow of funds during April. The debt category of mutual funds witnessed an inflow of 54,756.60 crore rupees during the month. Liquid fund, ultra short duration fund and money market fund witnessed the highest inflows. As the interest rates are expected to go up, these funds have been attracting more inflows. In April, the Securities and Exchange Board of India (SEBI), which regulates the financial markets, put a 3-month ban on new fund offers. This is so that the industry has time to ensure that investors' money goes straight into mutual funds instead of being pooled by distributors and other middlemen. In the absence of new funds, investors will keep on investing in old funds. New fund offers had been a big part of how much money went into mutual funds. Some people think that not being able to start new funds hurts the growth of mutual fund assets, especially for new fund houses.
SIPs dip. As of April 2022, the monthly systematic investment plan SIP contribution was 11,863.09 crore rupees, which was 464.82 crore rupees less than March's contribution, which was 12,327.91 crore rupees and an all-time high. However, in April, the number of SIP accounts reached a new high of 5.39 crore, which was higher than the previous high of 5.27 crore in March 2022. So what will be the future trend ahead? Akhil Chaturvedi, Chief Business Officer Motilal Oswal AMC says, despite volatility in markets and fear around macros, both globally and locally, it is a good trend to see continuous positive flows in equities. SIP flows are holding strong, which is also very positive. It will be interesting to see ongoing investment trends given the very high volatility intensity. I do expect the positive trend to continue going forward though.
So what should investors do? When it comes to the equity market, which continues to be volatile, the investors should not panic in such situation. They should review their risk appetite, financial objectives and goals. These occurrences will often occur along an investor's road to financial objectives, and one should not be persuaded too much by them. Investors should stick to their asset allocation plans and use a staggered approach to invest in equity mutual funds.